Music. We are live. Okay. Let's repost. Boom, boom. So you guys got anything fun scheduled for the 3-day weekend?
I'm taking my daughter back up to college on Sunday. Her winter
Okay,
break's
so
over.
they're getting back to college.
Yeah, she's not happy about it, but
Been on Easy Street for like a month at least, right? Mom doing
yeah,
laundry, mom cooking.
she had a
Yeah.
cold the first half of her break, so that sort of threw her off, and now she's bummed out.
Oh,
Now all her
that sucks.
friends are back, so she's like the last one to go back.
Oh, so her friends left while her friends were there while she was sick, and now their friends have gone, and she's last one
Yep.
standing. I get it. All right. Let's see. One more here. How about you, Berna? Any concerts you're going to?
No, I'm gonna have a quiet weekend because
You're gonna,
I
no
went.
concert in London or Paris or anything like that.
No. I was in Orlando. I went on Sunday for ICR, and so I was at a conference with like 3,000 people Monday, Tuesday, and part of Wednesday, and then I went to Disney with however many tens of thousands of people, and
Yeah.
that was on Wednesday night, and then I was in the airports yesterday, coming back, and I'm ready to be around nobody for the weekend.
You need a break.
I mean, if I don't have the flu after
I
the
was gonna
last
say
five
you'd be
days,
lucky.
then
Be lucky if
it'll
you
be
don't
a
get sick.
miracle. Yeah,
For
because
sure.
everybody seems to be sick, and yeah, and everyone was coughing at the conference and
Yeah.
sneezing at Disney and in the airport. I'm like, oh, if I get through this week, so
Yeah, knock on wood. I had a cold early, but then I haven't had anything since. So hopefully I'm in the clear. But who knows? I got young kids, so it's inevitable I'm going to get sick
yeah,
again.
yeah,
All right,
yeah.
let's get this show on the road. Welcome to Wall Street Beats, everyone. I'm Steve Lamar. Today is January 16th, Friday. We got a 3-day weekend ahead of us. I hope you got something fun planned. I've got Berna Barche, our retail and comms and gosh, what else? What other pro expertise do you have consulting with hedge funds, Berna? I know you cover a gambit. And we've got Bob Morris, our oil and gas pro. What a ride it's been owning oil this last week, Bob. What do you think? What next?
What next? I
We're
mean,
gonna get 55?
well, I'm still not looking for 55, but I guess now we got to just like before, we got to continue to see what Trump says. I mean, yesterday oil was down more than 4% on the open on the fact that Trump said that in Iran the protests or killings were coming down and that they weren't going to have any mass executions. Everybody said, oh, that means we're not going to go invade. We're not going to have any interruption to Iranian oil production or exports. And so everything's back to being good. But in the meantime, the economy remains strong. There's been some uptick in forecast for demand for this year, including by OPEC. And so it looks like the oversupply that everybody been forecasting for this year is not as bad as perhaps they thought a month or 6 months ago. So things are tightening up a little bit here. OPEC thinks globally things may be close to imbalance this year between supply and demand. In the meantime, Venezuela is going to start to let some of that oil out that was sanctioned before flow into the market. And so, you've got a little bit of an easing here in oil prices, although we're still around $60 a barrel, which is good. So, it's been a roller coaster ride, as you said, based on, just comments and headlines. And that's been the story for a while here on oil. It just sort of moves on whatever the latest headline or comment is out of Trump. And we go from there. So, we're going into a 3-day weekend. I think we'll sort of hold steady close to $60 a barrel. And in the meantime, when it did pop earlier in the week, I did do one thing, which I had signaled I might do, is on half my position on EOG. I rolled some 120 calls that expired today out to March and picked up $2.50 for those. So That was a nice little premium, basically, 2% over 2 months on the premium in those call options to roll those out to 120 in March. Now, the thing that's got me concerned right now is natural gas. And natural gas prices are down 35% since the beginning of the year. And as we've talked about before, this has all been about weather. And the weather's been warmer than normal this winter. And typically it's mid January that traders or investors make a decision and either stick with hoping or betting we're going to get a cold winter or they throw in the towel. And at this point, when it's been warmer than normal and the near term forecasts are for continued mild weather, is when they tend to throw in the towel. And you've seen that in the pullback in Expand Energy and EQT, which have come in about 15-20% off their peaks. And we now have the other thing was we got a lower than expected storage withdrawal yesterday, which was surprising. And now natural gas storage levels are above a year ago. And this is all concerning near term on the outlook for natural gas. And it's all driven by the weather. Yes, we're still going to get data center demand coming later in the year. Yes, we're going to see LNG exports pick up as we go through the year. But at this point, on my positions that I own in Expand Energy and EQT, they're back close to my cost basis. So I'm looking at writing covered calls this morning on half my position in Expand Energy here at the moment. If I'm looking out at 105 April calls, I can get 4.25, 450 maybe here this morning in writing those, which I may do just because I'm concerned that between now and the end of the winter, unless we have a sharp reversal in the weather, there's not huge upside in natural gas prices at this point into the spring. And so that's a concern for me. And I'm looking at EQT. I'll come back and look at where I might look to write covered calls, but I'm starting with Expand because it's still a good dividend. Again, the stock's right at about my cost basis. So if I can write, pick up 4.25, 450 on April 105, it's $5 above my cost basis. I'm looking at doing that here this morning, starting out on half my position in Expand Energy.
Where do you start thinking about or adding to the position? Another
Probably
another
below
15%,
95.
20%, or you full up?
I got a full position. I'm overweight in both right now. And so I do like them long term. It's just this weather's thrown us for a loop, and especially with yesterday's storage withdrawal figure, and with storage
Yeah.
levels now above a year ago, that's all very concerning to me. And so, you know, I'm not looking to add the positions right here. We'll sort of see where things go, but I'm just looking to take in some premium on the call
Yeah.
options
Sounds like
now.
sounds like it could be dead money here for the next couple quarters, right?
And yeah, unless we get a turnaround in the weather, and
Yep.
we're past the midpoint of winter, and that's not. We've been warmer than normal. We got storage above a year ago, so that's all very disconcerting.
Okay. You doing anything with any of the oil related names?
No, I'm still sticking with Chevron and Exxon. We talked about those
Okay.
before. Banks
Yep.
on the call yesterday talked technically about Exxon and Chevron and how technically they look very good. Coming into the year, I said, two of my top three picks were C&Q and Chevron, and both of those have done very well year to date. Expand Energy is the one that's been disappointing, but I'm sticking with those C&Q and Chevron. I'm not doing anything, sticking with those. It's just EOG, as I've grown less enamored with them over time. And so that's the one I'm just, early in the week, I
Yep.
said on Wednesday, wrote some covered calls on that just because I do want to lighten up my position ultimately, eventually in EOG.
Okay. All right. Good stuff. Berna, is this having any effect? These cheap oil prices starting to have any effect on your names?
I mean, in theory, yes, right? So,
Always a thing, right? Takes a
everything's
while.
always in theory. Like, it's cross currents, and people like to talk about lower gas prices as a
Right.
catalyst. The other
Yep.
big catalyst that people just cannot stop talking about right now is tax refunds, and it should be a good tax refund season. I do think that lower gas prices are constructive, although in the matrix of, there was a big article in the Wall Street Journal yesterday, or the day before, about how food prices are still up, not for eggs, not for anything, milk, dairy, those are down, but like, meat's up a lot, most fruits and vegetables are up a lot, most packaged goods are up. So, you know, you win at the pump, you lose, at the register. So I feel like it's cross currents. So I'm coming back from ICR, seeing dozens of consumer companies, and I mean the overall, I guess, vibe was cautious optimism after out of these companies. I think they braced for the worst last year, between tariffs and inflation, and then came out of holiday pretty solid,
Yep.
and all signs look good. And then they look at things like lower gas prices, and just so much talk about the tax refunds. Like, I was kind of sick of hearing about it by the end. But and just the probably the most notable thing is, like, kind of like everyone talking about tariffs like they're in the rear view window, although nobody, like, I mean, Wall Street's made such a big thing out of this IEPA hearing and the potential for refunds, whereas, like, none of the companies are talking that up. If
Yeah.
they get it, great, but they're not. Nobody's counting on it. So, like, I was happy that it was more of a conversation about specifics of businesses versus um, sort of overall macro. Because one of the reasons I like the consumer sector, and I would say the same thing is true in the tech sector, is that there will always be some winners, absent the just you can, even in a bad economy, there's always going to be a couple of winners, because these aren't like reversion. Bob's dealing with the ultimate reversion to the mean industry, in my opinion. Like, would if oil and gas are going the wrong way, it's hard to get the stocks going the right way unless something gets bought out. That's the only way things really have tons of dispersion. There's similar dynamics in financials, but in consumer and tech, where you have these massive market share shifts, you could have an overall decline in consumer spending, but somebody gets so much more of the consumer spending that the stocks still go up. So, we were talking about those stock specific factors and less macro, at the conference, which was positive for me. So, I think,
Any
yeah,
new names
yeah.
jump
So,
out to you?
yeah, I think I tweeted earlier in the week that there was a small cap that intrigued me that was new. So I'm not going to talk about. There were 6 companies that I have positions in that were at the conference. 5 of them I've talked about before. So Alico, the once orange company that has now a real estate play. Maybe I'll talk about that next week. National Vision, which is an eyeglass retailer. Five Below, teen tween discount, sort of dollar store type. Domino's China, Weight Watchers. And so the one that I haven't talked about, but I think Jeff has talked about it, in full credit to Jeff for getting me to look at this company, is Stitch Fix, which is a company that I hadn't looked at in years and years. The last time I looked at it, it was to cover my short that probably I made 80 or 90% on. I've been following this company since it went public, and thought it was going to be a train wreck, and it was. So this is
It's
a
been a
on
favorite short among the pod shops for sure.
yeah, I mean, but and then then it was done, and I just stopped looking at it. So this is an online styling e-commerce site. So you answer a whole bunch of questions about your style, your size, your color preferences, things like that, and they will send you the traditional models. They send you on subscription a fix every month. It used to be 5 items in a box. There was a $20 styling fee. If you kept one item, the $20 styling fee was waived. If you sent them all back, you had to pay the $20. And the sort of the pitch was, this is for people who hate shopping, which, in my personal experience, a lot of men fall into that category, and not a lot of women fall into that category. So, they had
We go in the store, we walk right out as fast as we can.
yeah, exactly. So, there were a lot of problems, with the business, when it IPO'd, which is, I don't even know, probably like, I'm guessing like 2016 or something, maybe 2018. It would, or let's see, I could tell you, but coming out of the gate, there were a lot of problems with this business. Let's see, I'm curious now. 2017, it was in the middle. So, I think a lot, the problem with a lot of IPOs, especially, this was a good niche business, right? So there definitely is a market for this. Even among women, there are people who hate shopping. There are people who have a lot of anxiety about getting themselves dressed in a work or social environment. But this is a niche business, and when companies go public, especially ones that come out of the Silicon Valley and had like a tech e-commerce angle, you want to you're there's the pressure to kind of have this giant total addressable market. What's the TAM? And the TAM is everything that Macy's and Target and Walmart sell to clothes and Kohl's and no, that's not the TAM here. The TAM is some small percentage of apparel, and you need to right size your business and size, your expense base accordingly. We've seen this story so many times with IPOs. You take like a decent niche business, and then you need to make it to be something that can be a 10x theoretically in the public market, and they size up for a market that's not there. So that was the short. The stock got there were probably splits along the way, but on a split adjusted basis, the stock went from like 15 when it IPO to like 100 in the beginning of 2021 during like the whole, sort of this was when there were meme stocks that everybody was trading during lockdowns and the thing crashed, it got to $2. It's $5 now. And I asked Jeff because he had it in his like 10 stocks for this, for 2026, like, what do you like here? He's like, this company's not dying and it's been left for dead. And I was like, okay, I always thought there was base business here. So let me go look at it. So what I like about this is that this is a company that is at a very clear potential inflection point. So they, for the last 3 quarters, they've gone revenue positive. They're growing their revenues. For the last 9 quarters, we've been growing their average order value. So each transaction is larger, and that has been supported by price because obviously the price of everything is up with tariffs. So companies are taking price, but it's also been supported by units per transaction. So whatever they're doing on the styling, they're hitting people with stuff that they like better and they're keeping more of them. So all of that's good. There's still like for a company that's perceived to be a subscription business, and you can sort of free shop their site now. It's not only subscription, but they are still net negative on quarterly sub growth, but it's each quarter the declines have been going down. They've guided to third quarter going positive on net subs, so they're sort of growing right now. Their ads probably like in the high single digits, mid high single digits, and they've been having mid-teen sort of churn. So at some point, they think by third quarter it's going to cross. They're already net positive on the men's business. So I think that they're on, and they've taken like big EBITDA losses to like totally tiny, EBITDA losses, and so they should later in this year cross into EBITDA positive as well. So I feel like I've seen, and then, now I'm going to sound
Is their
like
balance sheet?
the balance sheet is okay, is net cash.
It's
So
okay. Okay.
yeah, it's okay. It's like, this company has about a $700 million market cap and 250 of cash and 85 of debt. So they're fine. And I think that 85 is actually leases associated with DCs. So,
And what are they burning quarter?
I'd have to check. I think they're probably burning. Hold on, let me see. Trailing 12.
20-ish.
Yeah, something like that. Let's see. Free cash flow. Actually, looks like they're modestly free cash flow positive, just like a few $1 million the last few years. So there's no liquidity issue here. There's just an issue of like, when are they going to get the business positive? And it does seem like that, they're on the trajectory of that. Will it be second quarter? They say third quarter. Will it be third quarter, fourth quarter, first quarter next year? I haven't done the work to tell you that, but they're definitely going in the right direction. And so I'm going to sound like Robert here, and I'm going to say that, one of the things, this is a very low EV to sales. So, it's trading at like 40% of sales. So there's a lot of leverage there as they increase it, increase their profitability. And so for
Yep.
me, it reminds me a little bit of Real Real, which I've been talking about since we started Wall Street Beats, and has now become I don't know, more than 10 bagger for me. It's probably close to a 12 bagger. I wish it had been a bigger position, but this is going in that same kind of speculative bucket that I put Real Real in. But this isn't as good an end market as Real Real, because I think the TAM is smaller here. I think that for Real Real, like, secondhand luxury goods is a much, much, much bigger global
Yep.
TAM than this business is.
Yep.
So just make that clear. Not saying this is going to be my next 10x, but could it be a 2x? Like 100%, and or 3x, from these
Just
levels.
multiple expansion alone gets you
So
a 2x.
yeah. So let's talk about why it's turning. So let's talk about why it's turning. So what I liked is they have a new CEO who's been there about 2.5 years, and things started going in the right direction, several quarters after him getting there. He seemed competent. He's, ex Macy's, ex Walmart. He knows retailing. And when I was short this stock, it was like, lots of people hate shopping. We're going to take that pain point away from them. And this time they were just so much more specific about how they were going after markets. From what I know about digital advertising, an area that I spend a lot of time on, on the tech side, the tools available to you in digital advertising have increased so much. So like he was saying, one of the things that had turned their men's business was like they were very specifically targeting, and this will probably resonate with people who know people who fall into this demographic, men who are in their 40s and 50s who get divorced, and their wives have been buying their clothes for them for the last 20 years, and now they need to look nice because they're going to go dating. Like that target kills for them. Now, anyone who knows guys like that would say, hey, that intuitively makes sense, right? But like, how do you find those people? I asked him, how do you find those people? And he said, divorced dad forums on Reddit are amazing for us. So, Reddit didn't even have advertising.
Not the dating sites.
Oh yeah, they also advertise on the dating sites too. That was another one. But I just thought it was interesting because like Reddit was, not even like, when you think about like micro targeting, because like another demo they talked about, people who lived in the North, in the Midwest or Northeast who moved to the Southeast or the South. And all of a sudden, like their whole wardrobe needs to change because it's, a warm weather wardrobe instead of a cold weather wardrobe, targeting them. And you could think about all the places you would find them. Or, they talk about people who have been remote workers for the last 5 years and all of a sudden have to go to the office and like, nothing, they don't have the outfits anymore, so like, I liked how he was defining his, sort of micro targeting. Of course, they're doing big top of funnel stuff too, but the specificity of how they are targeting potential customers, and then the tools that are available to getting them, having evolved a lot since I was short this stock,
Sure.
was interesting to me. And then, so much talk at the conference about AI. But this is a company that, what I will give them credit for, and what I remember from, when it went public and when it went, this company actually has been using machine learning for a long time. And, I'm going to try the service again, but I tried the service when I was short it. And there were a lot of things that I could critique about the service. But one thing that I couldn't critique is they were very good at sending you things that fit you. I might not have wanted to keep everything in my box, but everything in my box really fit me, which, I just went through like an exercise of having to buy a special occasion dress for an event, and I was ordering online, and I had to order in 5 different sizes to ultimately find the right dress. Because women's sizing is so all over the place, and there, you can find, go down a TikTok, rabbit hole watching videos on this. So the idea of them having data around your measurements, having data around other people who have the same measurements, seeing what they sent back because it was too big or too small. Like they were always very good at that with like the data on fit. And now they're talking about using AI in all sorts of different ways. Like they have a visual tool where you can sort of upload a picture of yourself and see the clothes online on you. They also,
Right.
because it's all like, machine learning algorithms, you could pick an item. Like I looked on the site and there's a pair of pants that I have in my closet that they sell that I really like this pair of pants. And I said, okay, design me a box with this pair of pants as the anchor of a bunch of different outfits. And so the service has always been a mix of part-time people human beings who style people, plus the computer running algorithms of correlations of people who like this, like that, people who fit into this, fit into that, and
And what are they
the
sending? What
power
are
of
they
AI
sending you,
here is
Berna? What are
what?
they sending? Are they sending you their Stitch Fix branded
It's a
clothes? Or are
mix.
they sending you a Gucci this and a Louis
It's like
Vuitton that, or what are they?
it's like it's sort of mid price. So they're 45% private label, their own brands, where they have like a higher margin, and they said that's probably about the right mix. There's not like a huge opportunity to go more private label, and then they supplement it with known brands. So like, one of the things that he told
And
me,
then do
which was
you get to
interesting,
select whether
was
you want the higher tier, or the lower tier, the
yeah, you
mid
give them
tier?
sort of like your dollar per item, but they have brands like, they would have probably like, one of the mid-tier Ralph Lauren brands, or they'd have like Viore is a very big one on
For
their
sure.
site. And they said that they were a big part of Viore's like actual growth outside of California before they had stores outside of the West Coast. So it could be Michael Kors, it could be Tory
Okay.
Burch, also sort of like, or it could be something a little bit cheaper than that, but national, a combination of national brands and private label, and they've sort of moved into accessories and shoes and sort of doing head to toe, whereas they were just apparel units before. So
So
I think it's interesting. I got to
is there
circle
a
the
catalyst
wagons to talk to Jeff.
you're looking for in the next
In the next
quarter or two to kind
well,
of
I would say,
validate your?
well, I think that they've been very steady in their guidance of Q3 being the quarter where net subs go positive. And so the way that I look at this, it's sort of this way that I looked at Real. This business has the balance sheet and the financial profile right now to not die, right? So it's not going to die.
Yep.
It does have an end market use case. It may not be, if the sales right now at this company are 700, it's probably not a $7 billion use case, but could it be a $1.2 billion or $1.5 billion use case? Maybe, but even a $1 billion use case works if you're at 700 million now.
Sure.
So it has a larger TAM than what it's hitting now, and so in terms of, it's not going to go away. It's cheap, and there are a few levers or catalysts that could happen here that I would make people reconsider the stock. One would be being EBITDA positive, and the other would be having net sub additions as opposed to net sub deletions. So or declines.
Okay.
So that's what I'm looking for, and then I think you could probably get a strong double digit, probably 20 to 50% move on either of those things happening. And then from there, you keep on reevaluating like strategically what they're doing. And I think, all this stuff around segmenting, around AI in a very tangible and not sort of pie in the sky way, all of this makes sense to me. So, you reevaluate along the way. Does it become an interim trade for that sort of first recovery, or is this something that could be a multi-year, recovery story? But stock was gone from basically 100 to 2 to back to 5. So I'm not saying it's gone back to 100, but it's washed out still. So
I see Bob's been over there surfing their site looking for a new running outfit. All right. Well, why don't we wrap it up there? Great new idea from Berna. Thank you. Stitch Fix. We'll keep an eye on it. I hope you update us along the way. What's that?
Credit to Jack. I want to give credit to Jeff.
Credit to Jeff.
He put it up. With credit, he put it on my
Okay.
radar.
And we got Bob writing calls on his gas position. So
I actually did that during. So got $4.30 for some Expand Energy April 105 call. So
There you go. It's done. Orders in. Okay. All right, guys, enjoy your weekend. Thank you for joining us today. Thank you, Berna. Thank you, Bob. We will see you back here next week. Enjoy your 3-day weekend. Have a great day.
thanks.
Bye.